Hi, I'm Nicole Urken, Research Director for Mad Money, and welcome to Behind the Scenes of the show. I'm here with Jim Cramer, and we're talking the next leg of the market rally and employment. Now, Jim, we have continued to try to wrap our heads around this rally, and we got a really great jobs number out on Friday. We did this kind of painstaking piece of work where we were looking at the Dow companies and how employment has changed at these individual names that have surged. And we've seen that a lot of the strength of these companies has come despite employment growth.
Right, I think that one of the ones, and we're not done with this survey obviously, is Alcoa. Now let's take the case of Alcoa, which has for the first time, my friend Matt Horween pointed this out this weekend, has a great chart. It hasn't had a great chart in 2 years. Alcoa, the more people they lay off, the more likely it is that they have a resurgence. What they're trying to do is lay off people in expensive places overseas and add people in America because the auto demand is so strong. The more that Alcoa cut people, fired people, the more likely it was going to have earnings leverage. And I use that as a microcosm, it's a metaphor for these Dow stocks because they've realized, look, we don't have top line growth, so we better get bottom line growth. And then when top line growth comes, we will make fortunes, and that's what's beginning to happen.
And specifically at Alcoa, in 2012, they ended the year with 61,000 employees. They had 107,000 employees in 07 when the market was at its height. Now, when we went to the company, they adjusted that 107,000 number to 61,000, so it's about even. And their reason was, well, it's restructuring. But it's exactly what you pointed to. They're looking at modifying the business to fit current demand trends and to be operating more efficiently.
Right. I mean, look, let's give Alcoa its due. Let's say they're doing that. I don't really care. What I'm saying is that there's too much capacity. By closing some factories, they are diminishing capacity, which may make it so that the storehouse, the warehouse aluminum, is then finally run off, which would then allow prices to rally, which would then make it so Alcoa is going to do much better. And that, I mean, we're seeing that throughout the big cap stocks. And Verizon has laid off a lot.
Verizon and AT&T down Verizon down 51,000 employees, AT&T down 61,000, 2007 to 2012. And these are companies, again, it's important for them to be shareholder friendly, increase their dividend, have some revenue growth, invest in wireless. These are things that they need to do to protect their stock price.
Right. I mean, these were considered to be labor-intensive companies, and they're no longer that. They've managed to be able to figure out ways to have fewer people, linemen, fewer, like if you have FiOS, there's an easy way. You go to the FiOS questioner, and they solve a lot of your problems for you.
AT&T specifically wrote to me saying the change in our workforce reflects the ongoing transformation of our company from a traditional wireline phone company to a next generation technology company. It speaks to exactly what you're saying.
Look, let's be very clear about this. We're not political here. I could argue that all this is bad. I could say, listen, they're putting jobs overseas. That's not the hat. Look, if I wanted to be a political scientist or be a politician, I'd talk about that. Instead, what I'm focused on is the idea that Intel added people. Did they add them correctly? Microsoft, because I want to talk about earnings per share. I find that anytime you do a piece about layoffs, it becomes political. That's not the point. The point is that these companies are not adding that many people, but they've added as many as the employment force has. But the main thing is that the companies needed to have fewer people to become more productive and have bigger earnings per share.
And that's a perfect wrap up. Where we are now is where can these companies go now that they're more profitable? We saw a great jobs number. Maybe now it's time to be adding. And
that's what I think we'll see.
All right, thanks, Jim. All right, the Dow 30, very telling on what's happening with employment. Great number on Friday. It could be another leg up in the rally. I'm Nicole Urken with Jim Cramer. Thanks for being with us.